We're actually talking about a piece that I wrote and published yesterday about the complexities basically of shorting Tether. And this is in the context of the SEC crackdown and the possibility that Tether could face some kind of regulatory scrutiny or enforcement, which obviously could be bad for the token. The problem, though, is that the SEC is also blocking major U.S. mainstream TradFi institutions who might want to short this token, blocking them from accessing the infrastructure that they might need to do that in a way that's easy for them. So, in fact, ironically, as one of my sources put it, the SEC may be the biggest thing protecting Tether right now from forces that would potentially knock it off of its peg. I guess I'll just throw it out there, especially on the question of where the regulatory winds might be blowing with regards to Tether. It does have some insulation because it's nominally offshore, but we've seen that that doesn't necessarily provide airtight protection. Do people think the SEC is going to go after Tether? Zach?
Yeah, some bank analysts do. We talked about this yesterday on the show. There was a report, I think it was from Berenberg, saying that stablecoins may be next on the list as it relates to the SEC's crypto crackdown. And, as you alluded to, David, like the idea that Binance is largely an offshore entity didn't stop the SEC from going after it with very strong terms. So this idea is certainly possible. Whether or not it's plausible, I think, is anyone's guess right now, right? Does Berenberg know something that we don't? Do the sources in David's piece know something that we don't? I think it's hard to say, like, whether or not the SEC specifically thinks that stablecoin issuers are ripe for disruption as it relates to a regulatory crackdown. So that would be a big one. I mean, if you're SEC Chair Gary Gensler and you're saying, okay, what is systemically important to the crypto sector, Tether would probably be right up there at the very top of that list. So potentially target, but hard to say if that's going to be how it's tackled. They've had a problem, I think, with taking down issuers themselves, and we've seen them focus on exchanges and stuff and attacking token issuers by proxy. So I don't know. I don't necessarily have a strong opinion as to whether or not that is the next shoe to drop, though certainly some are out there, speculating that may be the case. I guess I want to throw it back to you, David. What would be the mechanic by which people could short Tether, right? There's less of an open market dynamic around how to sink the fortunes of this company. What would that look like? You mentioned that it would be technically complex.
Well, it's not so much that it's complex. For crypto natives, it's not complex because really, like any short, the first leg is you just borrow it, and you can borrow Tether pretty much anywhere, in a lot of different venues, particularly DeFi. It's very easy to borrow Tether, and then like any short, you borrow it, and then you sell it or you swap it for another stable coin on the assumption that maybe it'll depeg and then you can repay that loan cheaper. The problem is that you can do that on decentralized exchanges, but there are very limited, if not no, venues that are accessible to traditional finance where you can do that, and they don't have the expertise to either go directly to the DEX, or maybe they're paying a broker dealer to do that for them. But that adds to the cost of carrying the trade, which makes it much less appealing. And there's also already limited upside because, there are questions about Tether's backing and redemption, but they're not, I make the point that it's nothing like Terra USD, right? This algorithmic stablecoin that collapsed to zero last year. Tether is not going to collapse to zero, even if they have a significant depegging event, because they do have really substantial assets. They can redeem a lot. And so there are these barriers where even if maybe there is actually only 95% backing, somebody shorting it is not going to find that out unless you do it at real size, because it's an $80 billion asset. Wendy, I saw you wanted to get in there.
Yeah, I actually have a question for you. As I've covered Tether extensively on my channel since 2019, and I just remember all of the Tether FUD from the previous bear market, like they're insolvent, they don't have enough fund. There's always Tether fund with every cycle. But I guess my question is, they've really, really gone through the ringer with the NYAG. The NYAG absolutely pretty much gaffled them up and said, hey, what's going on? And they had to provide reserves. They had to become more transparent. And this was, I believe, before Tether was even listed on a lot of the major centralized exchanges. So I guess my question to you is, does any of that scrutiny matter? Is the SEC, do you think, is going to look at that? Or how is this going to impact Tether, considering that they've kind of gone through one of the biggest entities in the US, NYAG, because it's a big deal to have to deal with them.
Yeah, I mean, to be clear, the NYAG thing is not a stamp of approval that they're legally okay. It's a very specific action. But I think more generally, like the point that they have shown that they're robust is very, very clear. I mean, they've been through years of skepticism. CoinDesk recently did a FOIA request, and we did find that there have been misrepresentations. I mean, there's no denying that there have been misrepresentations by Tether of the nature of their reserves, and that does give some fuel to this short thesis. But I think my holistic take, is that they've made some mistakes, and who knows what's going on under the hood. But that at a very high, broad level, they are trying to actually do the business that they're saying they're doing. I don't believe personally, and this is holistic and impressionistic, but I don't believe it's like some super long exit scam or Ponzi scheme. I mean, we know they have a bunch of T-bills. They have a bunch of, not as much commercial paper anymore. So they've made some changes to be more resilient. And then the other question is, what can the SEC do to actually touch them? I mean, you can get it off of U.S. trading venues, and that's probably close to it. I mean, Palo Arduino, I'm sure, is already not exactly planning any vacations to the U.S., but there are limited options, I think, for enforcement here. So, I think those are the real questions: is what can you do? And they're not based in the U.S., and there might be something you can do, but it might be limited.